Hey guys, welcome back to my channel. In this video, I'm going to break down an awesome trade I took on Meta. That was a daily chart breakout, a weekly chart breakout, and I made approximately 25 to 30% on this trade within the first 15 minutes of market open. So here's a weekly chart of Meta in front of you guys. This is, guys, a really good price action. This is like this price action. We can take a screenshot and we can write a book about this price action, right? It's so like really good price action. It's just like basics of price action. We had a push towards the upside with increase in volume. This was the earnings week. We gapped up, high volume, consolidation. The volume went down. On this green candle, push up. The volume also increased. On this red candle, consolidation, low volume again. And this week is still ongoing, but we had a nice push towards the upside. So two bull flags on the weekly chart right here. The first bull flag is approximately, I would say, right here. This is the first bull flag. Then the next bull flag, we had a push towards the upside, a bull flag again, right? So really good price action on the weekly chart. Coming to the one-day chart, I had this zone marked and I discussed this zone in the upcoming week webinar that we have for our Discord members, that I mentioned them that I'm watching this hold of 175 and 180 zone for a push towards the upside, right? I took a day trade on Monday as well, a quick scalp for the hold of 175, and I held it for the break of 180. I think I took my profits on 182. I made like really nice profit on this trade as well. I think I made approximately 50 or 60% on this trade, catching the bottom, approximately the low of the day right here. But we are now talking about Friday, right? On this day, we can see that we made a new weekly high. So the prior weekly high was right this level, which was 197.16. Then we also had the 196.77. On Friday, we were gapping up. The open on this day was approximately 198.26, and the yesterday's high and the yesterday's close. So I'm going to remove these levels because we are going to look at the yesterday's high and the yesterday's close right here. So 197.78 is the yesterday's low, and let's see how we reacted to this level at the market open. So this is the level I just marked, 197.78, which is the yesterday's high, approximately the yesterday's close as well. At the open, we pulled back to this level, we found support, and we went for the break of 200. So that is approximately 2 to 3 points move within the first 15 minutes of market open, and there is good amount of money to be made with trading options, and especially when the daily chart is so extended. So what happened at the open, if I include the extended hours, the after hours high was even approximately 204 or 205. The after hours session, the high we had was 202 in the pre-market and approximately 204.7 in the after hours yesterday after the market close. On the 1 minute chart, I saw at the open that we bounced off this level. So I wanted to wait for the first 2-3 minutes of the open because the market has been pretty choppy this week overall because of the quad witch week we have on Friday, and then next week we have the FOMC. So the market has been pretty slow this week. Last week we had good price action, but this week the market is pretty much slow. My first entry was at 9:33 a.m. So this was based on the level 2 because I could see a big buyer at 198 and 197.7, and then my first entry was right here, and then I added to my position at 9:37 because then there was another big buyer on the level 2 on the book map at 198.30, and this on this candle right here, that big buyer got filled, and then we pushed towards the upside. So I added to my position based on the level 2. We got this quick push towards the upside. I'm going to post a screenshot of my entries and exits at the top. So my fill was around 2.3 on the first, 2.26 on the second fill. Premiums went to a high of 2.9, approximately $3, which is approximately 20 to 30% win on your investment, which is really good off the open. Now the amazing thing about this trade is that I mentioned this to our Discord members that take your profits at a technical level because we might reject this 200 looking at how extended we are on the weekly chart. I'm going to show you guys that message. In the group, I mentioned that only watching Meta for a potential trade, nice hold of prior close and push up with high R wall. That was my message. And if Meta comes under 197, I'm shutting down my setup because the market has been pretty choppy. If SPY goes towards 390, as I mentioned in the webinar, Meta can have a really good day towards the upside. So what happened right here? When we broke 200, my entry was right around 198, 197.5, approximately the low of the day, which was the prior high of the day. And then I mentioned this after the breakout, 200 is a good profit target for traders who entered earlier in the week. This is very important. Have a technical take profit, stop and get out. No emotions. I wanted to write like no emotions, but I was trading at that time. My trailing stop is 199.5-ish. So this is what I mentioned. A lot of members avoided this fake out because I know personally this is looking like a nice bull flag. If I draw a bullish move right here, we can see bull and then flag on low volume. So the volume is increasing. amazing. This is a very nice bull flag. I took my majority of the position out on this candle, then I got stopped out on the remaining position. Right at the top of this candle, my fill was approximately 2.7 and my entry was 2.3. So the worst fill was at 2.7, but on this position, on this candle, the premiums went to 2.1. How do you avoid fake outs like these? Because the daily chart is very extended. As I mentioned, I took this trade on Monday as well. So people who entered right here for a swing trade or something, what will you put your profit target as with having like 4 green days in a row with being FOMC next week? It will be 200, and that's why we saw a nice rejection at 200. Now we can still go towards 200 and go towards like 205 or something, but the thing is risk to reward. If you enter right here, your risk has to be say 197. So even if you catch a move to like 206, your risk to reward is still not in your favor because you're trading options on a Thursday. So that's why, like, with the help of overall market structure, with the help of level 2 and the market depth, you can avoid fake outs like these ones. And also, as I mentioned, my second entry was based on the level 2 and so was my first entry, but I have a screenshot of the second entry and how the tape looked like at 198.30. As I mentioned that there was a big order at 198.30 right here on this candle. So on the next candle, we tested this level, then we failed to hold under 198.30. So a big buyer is interested in buying at 198.30 with a lot of technical levels underneath us. So this is a bullish sign. I entered my position right here around 198 with a stop loss at 197.5 and I caught the break of 200, which is a really good risk to reward trade. So guys, there are a lot of strategies based on level 2. I have personally caught a few really good trades, especially in a choppy market like this because of level 2. If you guys don't follow me on Instagram, go and check out my page. I have made an announcement on Instagram already. In the next 3 weeks, we are starting a summit, which is going to be 4 weeks intensive training program where I'm going to share my 4 years of experience, everything from basics to advanced price action, the basics of price action, the market sentiment, the market depth, along with examples like this one, a lot of examples with screen recordings and what is happening on the level 2, I'm going to share in that summit. If you guys want to be a part of it, the link to join the waitlist will be in the description box below. That's it guys. If you like this video, give this video a thumbs up, subscribe to my channel for a lot more educational content like this one, including level 2, the market depth, the price action. And if you guys don't follow me on Instagram, that is a must follow because I share a lot of trading recaps along with my life outside of trading on Instagram. So go give me a follow there. Thank you for watching and I will see you guys in the next video.